So you hear it all the time, but what does it really mean for the seller to pay the buyer's closing costs? So if you're a home buyer, you are probably wondering, how do I get the seller to pay my closing costs, or how do I finance those into the transaction? That's something that you hear all the time. Finance your closing costs into the deal, but what does that actually mean and what does that look like? This is a question we get all the time, and understandably so. If you can leverage that cash out of pocket, why not if you can? But let's explain exactly what this looks like. First of all, there's things that a seller needs to consider and things a buyer needs to consider. Just a quick explanation for exactly what this looks like is essentially, let's say we have a home that's $300,000. If you're a home buyer, you probably have around 3% in closing costs if you're financing with a lender. So that's going to be around $9,000 in closing costs. So one way you could do that is you could offer $300,000 for the home and ask for the seller to pay your closing costs. If it was the full $9,000, then essentially you're asking for a $9,000 concession. And that would effectively be an offer of like $291,000 to the seller, of course. So essentially $9,000 less than their asking price. So depending on how long the home's been on the market, what true market value is, of course, will depend whether or not you are successful with that offer. Another approach might be that you want to offer full price but need concessions. So in that same example, if you were to offer $309,000 for the home and ask for $9,000 in concessions, that would effectively be a $300,000 net offer price to the seller, so they're getting full price. And that might be a way to approach it if the home's new to the market, or you feel like it's something where the seller's definitely priced correctly and they're probably not going to come off their price. That's how you'd have to approach it. So back to things that the seller and buyer each need to consider. First of all, as the seller, the most important thing is it's really about your net proceeds. At the end of the day, whether you're paying concessions, whether you're not, whether you're paying for home warranties and transfer tax and HOA transfer fees and all these things that go into a transaction, it's really about your net proceeds, and that's the number you should be most concerned with. However, there are some concerns to note if you're paying concessions for the buyer. Number one would be appraisal. In the example I gave a minute ago, if your home was $300,000 and they offered $309,000, well, for you to realize the full benefit of that net $300,000 offer, the home needs to appraise at the $309,000 because the buyers raised the sales price to offset those concessions. And of course, if they're offering $300,000 with the $9,000, well, you're getting $9,000 less than you want for your home, and that's something to negotiate as well. Another small factor to consider for sellers is closing costs. If the sales price is higher, most of your closing costs are going to be related to percentage, so you're going to obviously pay a little bit more closing costs at $309,000 or $305,000 than you would if it was $300,000. It's not large, but it's something to make note of and to be accounted for when you're looking at your net proceeds. And the last thing I would mention for concessions is going to be buyer liquidity. It's important to look at the buyer's liquidity. How big of a down payment are they putting? And do we really feel that they're asking for concessions? Because why not? It makes sense to leverage that and keep cash in their pocket for improvements and things like that if they can. Or are they asking for concessions because they truly are struggling with the liquidity aspect, which the only main thing to consider there is if there was an appraisal issue and the home didn't quite appraise at the sales price, are we working with a buyer who has the ability to negotiate further to actually purchase the home in the event that happens? Again, big difference between wanting to get the concessions versus having to have the concessions, and that should be a factor in your discussion with your agent on which offer that you should negotiate or accept. Now for the home buyer, things to consider when you're asking for these closing costs from the seller or concessions is going to be, first of all, on a side note, down payment assistance programs. That's something to explore with your realtor or with a mortgage lender you're working with. Are there DPA programs that are available to you where you can actually get closing cost help without having to ask the seller for it? Because in a lot of situations, it will weaken your offer if you're asking for those closing costs. The next thing to consider is, yes, the benefit is it saves cash out of your pocket and allows you to do improvements. Maybe you're wanting to update, flooring or some things in the kitchen or landscaping, and that could save you a lot of cash out of pocket. $9,000 in the prior example is a lot of cash to do a lot of things to your home. And the good thing is, and you do need to consider, it does raise your monthly payment, Because in the example we gave, if you were to finance $309,000 instead of $300,000, that $10,000 is going to be about $50 to $60 a month on your payment, which most would say is a no-brainer to have my payment go up $50 or $60 a month in exchange for $9,000 or $10,000 in my bank account. But nonetheless, you need to make sure you're qualified with your debt-to-income ratios for that additional payment, and you're comfortable with that in your budget. The next thing to consider is it does weaken your offer. The seller now understands that the home has to appraise higher. If you're competing with other buyers and those buyers aren't asking for concessions, essentially if the seller has the same net offer from another buyer, but the home has to appraise at $5,000, $6,000, $7,000, $10,000 less for this one, that's probably a safer decision for the seller to make sure they're actually going to realize the true net proceeds that they're counting on there. And then, of course, as I mentioned for sellers, the liquidity issue is you do just have to know that you do appear less liquid to some sellers depending on your loan program and your down payment and the full package of your offer. So those are just things to consider. But again, if you can leverage it and it makes sense, why not? Because there's a lot you can do with that cash, and we completely understand that. In fact, I would say that if you're ever going to offer less than asking price on a home, you might as well start with the concessions. If you don't think you're competing with other offers, and that's something you want, and if the home's listed at $300,000, for example, you might as well start at $295,000, but do it at $300,000 with $5,000 concessions or $10,000 concessions, whatever it is that you need. That would be the first way to start with your offer if you're going to offer less. And talking about a competitive market, I recommend you go back to episode 16, where we actually discussed in detail as a buyer how to be competitive in a low inventory market. Maybe you do need concessions or really want that closing cost help from the seller. So in certain markets, you have to be very creative and outside the box in how to be competitive, but also still try and get that outcome you're looking for. So go back to episode 16 and watch that. I hope this was helpful for you, just trying to explain clearly what it actually looks like to ask for concessions and what a seller needs to understand as well. Please share this content with anybody you know that you think it could help. You can subscribe to the YouTube series, Real Life at Level 10, for future episodes, as well as the podcast on iTunes or Google Play Store. So I hope this is valuable to you. Again, thanks for tuning in to Real Life at Level 10. And whatever it is that you're doing or walking through, remember, do it at a level 10 and live with the results. This episode was filmed at our Team Farnham listing at 3119 Dalmatia Avenue in Henderson, Nevada. For more information on this home or any of our Team Farnham listings, visit teamfarnham.com.